Mitt Romney wins big in the New Hampshire primary with almost 40% of the vote. But U.S. futures head lower as caution rules the day. Tech giant Microsoft warns of weak fourth quarter PC sales, and ratings agency Fitch says the European Central Bank needs to do more to help Italy and prevent a, quote, cataclysmic euro collapse. I'm Alex Steele, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. It's Wednesday. Happy Wednesday, everybody. All right, Scott, we have futures coming off that 1292 level. And my first question I asked you before we started the show, why? Was it the Microsoft headline that PC sales are going to be weaker in the fourth quarter? Was it the information that Germany grew only 1/4% in the fourth quarter? Are we preparing for the Italian-Spanish bond auction later in the week? Is it the fact that that Fitch said, the ECB really needs to step up and help Italy to avoid a cataclysmic collapse? Or are we just hitting up some key technical levels?
Well, there's always a what behind the when or a when behind the what. Everyone talks about the fundamentals, the technical, so you have a ton of headlines there.
Yeah.
So we're by far not out of the woods, but we are moving steadily forward. So that's the way the market is acting, where you're having a slow, methodical move higher. But within that methodical move, there are stocks that are showing relative strength. There are groups that are on fire. There are trades to have, both on a short-term and a bit of a mid-term level. So even though we have all these headlines, and even though everyone's so anxious, there's still a lot of money being made in the last week and a half since the year started. So I like the tape right now.
Well, I was going to say, let's go to the chart and look for some support levels that perhaps you might buy the dip, especially because headed into Chinese inflation data, the ECB meeting tomorrow. Maybe it's not the worst thing in the world if we come off and give people an opportunity to buy.
Yes, you got to back up the truck so people are on board. And if you look here at the S&P, you will see this methodical move. First things first, everyone was complaining when we went so fast from that October low of about 1100 to 1292. Look how fast that happened. So people didn't have time to get involved, and they were waiting for a pull-in. Now we're in this new year where we broke above this descending trend line over Christmas, actually, and now we're just stutter stepping up. But within this period, we've had a lot of groups outperforming, the banks, the home builders, some tech. It's been great. So yes, would we have liked to have seen a big move over 1292? It didn't happen. That's fine. I want to just show you quickly on the spiders a quick chart here. If you remember the first day of the year, remember that day? That was this gap up, okay, and there was no traction. And then it took about 4 or 5 sessions, to consolidate this before moving up again. And within those 4 or 5 sessions, a lot of stocks had big moves. So today, I'm going to watch yesterday's low of about 128.95. I'd like to see, a portion of this gap hold, kind of like what happened here. And then if we get a portion of this gap holding, then I think we continue higher as long as we don't see any kind of catastrophic headlines. We could see some negative ones, but the slight negative ones, the market's been able to take that in stride.
And be able to buy the dip. Okay, so then let's get to the stocks you're going to be looking at. You mentioned that banks and home builders are doing really well. We saw a report from Lennar today. Disappointed on earnings by just 1 cent, but revenue was above estimates. We had new orders up, I think it was 16%. The backlog was up about 6%. You also have been trading the Goldman Sachs, say the Bank of America, JP Morgan, of course, headed into earnings on Friday. What are you doing?
Well, the HGX and the home builders took a lot of people by surprise. They thought it would be like just a dog of the Dow type of trade or just a bottom feeder type of trade. But the power of this move has a lot of technicians like myself saying this could indicate a bigger move next year. If you look at the chart here of the HGX, you will see a powerful move. This was that October low, and look at this stretch you have here. It actually went above most of the resistance. And if you look at the daily chart, I mean not the daily, the monthly, it's coming into some big resistance. So at this point, I think this move was sharp and quick, and you can't really chase it here, but with some sideways action, it could continue. So that overall could be very healthy. Jim Cramer used the charts on his Mad Money last night saying that, if this is indicating a bottom in the housing market in the next 9 to 18 months, that means the economy is going to get that much better. And that means you could be long the overall market because the economy will be on the mend, and we actually get a little bit of momentum.
Very quickly, let's go 20 seconds here. What about the banks? And say Apple, I know you like to trade that.
Well, the banks, I've been long JP Morgan for the past 2 weeks. It's heading into a little resistance into earnings, probably going to soften some up. Goldman Sachs, great move yesterday. Finally, some power over 96.5. I think that can continue to 102, 103. I'm going to stay with it. Apple went into resistance real quickly, right around those highs. You want to take a quick look at the chart. You go to the daily here, you will see boom, a little bit of a breakout the old highs, but I think the earnings will be the telltale next week. So at this point, a bit cautious as earnings season starts.
All right, we're going to get into much more of the banks as well as Apple, an entire morning call, so check it out on the street.